So we've raised rates 4.5 percentage points, and we're talking about a couple of more rate hikes to get to that level we think is appropriately restrictive. And why do we think that's probably necessary? We think because inflation is still running very hot. We're, of course, taking into account long and variable lags, and we're thinking about that. The story we're telling about inflation is, to ourselves, and the way we understand it, is basically the three things that I've just gone through a couple times. And again, we don't see it affecting the services sector ex housing yet. But I mean, I think our assessment is that we're not very far from that level. We don't know that, though. We don't know that. So I think we're living in a world of significant uncertainty. I would look across the spectrum of rates and see that real rates are now positive, right, by an appropriate set of measures, are positive across the yield curve. I think policy is restrictive. We're trying to make a fine judgment about how much is restrictive enough. That's all. And we're going to, that's why we're slowing down to 25 basis points. We're going to be carefully watching the economy and watching inflation and watching the progress of the disinflationary process.
Did you or your colleagues discuss the conditions for a pause at this meeting this week?
Well, you'll see the minutes will come out in 3 weeks, and we'll give you a lot of detail. We spent a lot of time talking about the path ahead and the state of the economy, and I wouldn't want to start to describe all the details there, but that was the sense of the discussion, was really talking quite a bit about the path forward.